Have you guys noticed that the uptrend in the stock market has been lost? Is that because fundamentals have changed, earnings aren't as good, maybe the central banks are going to tighten interest rates? I don't think so. I think there's something else going on here about below the surface that can explain why we've seen the loss in the uptrend. So we're going to dive into that here in 1 second. We're going to get pretty heavy in terms of Fibonacci price and time tools. Before we do, last video, appreciate all the comments, the feedback. I really kind of stirred the pot. I tried to. It was fun. If you haven't seen it, I'll link the video. You know what? I'll do it on this side right here. If you want to see the realities of trading and secrets that I would only share with my kids as well as you. So let's dive into the S&P 500 and figure out why have we lost the uptrend. So we're looking at a monthly, and there's a lot of stuff here. I'm going to hit you hard with this one. Let's dive in. February 25th, just before the NASDAQ crash. Let's mark that high. Let's compare that to October, just before 2007, before the credit crisis high. 90 bars, 2,700 trading days. What if we took 90 bars, 2,700 trading days, and projected that from pre-credit crisis high? Do you know what that high wound up being? That wound up being May 2015, the high in the stock market so far. Okay, so basically, I mean, that's amazing, right? We did see a moderate little crash back there in the August summer market. Not, nothing like we've seen in the NASDAQ or credit crisis, but still, it's been a pause in this, unrelenting uptrend. But wait, we're not done there. We're not done yet. Okay, we're gonna do another study. I'm gonna borrow this bar, or this study. Let's go from the post-NASDAQ low, compare that to the credit crisis low, and a 100% time projection will bring you to, oh, look at that. Let me make sure I have it right. There it is. It will bring you to August 2015. Amazing. I'm not done yet. We've got more time to do here. I want to do total time traveled in wave 1 compared to wave 2. We're going to go purple dot high to purple dot low. Let's go, as I said, let's go from wave 1 low up to the high, which is going to be right here. Extend it up, make sure we grab them. There we go. And then let's project that time up from the end of the correction. Okay, there's a lot in there. I'm just going to keep the most popular fib. So this one had a 61% as well as 100% time projection. So there's quite a cluster of time resistance between April 2015 to January 2016. Guys, I think that's a big reason why we're seeing a lot of congestion up in this period, because there is a lot of timing. The next series of timing you can see out here comes around June of 2017, a full more than a year away. Okay, in terms of price, let's do an external retracement of this drop, the credit crisis drop. A full 100% will bring us back to the old highs of 1576. A 1272 external retracement based on your semi-log scale is 1991. So guys, I know I hit you really heavily there with fib price and time. I'm working on a Fibonacci e-learning interactive course, and I'm working on the concepts we're talking there. That course will be released soon, so I really wanted to share that with you. That's the reason, guys, we've seen so much volatility. No real progress has been made, because this is a key fib timing cluster. Within the elite wave count as well, we are in a third wave with a fourth wave consolidation ongoing. Color's a little dark there, so I'll leave that alone, but we are in a fourth wave that is being kind of captured by time. So that's why we're having a lot of volatility back and forth. I just wanted to touch on that a little bit. No real takeaway. I don't have a real opinion in this market. I was on CNBC Squawk Box this morning. Brian Sullivan asked me, where do you think the market's going?
Yeah. After so-and-so.
It's.
And then I think he mentioned.
You're in 4K.
Hasn't talked about this.
This is GoPro.
Maybe he's in shock.
Absolutely GoPro.
Why are you GoProing this? We're not.
You guys are in all
We're
4K.
not ice skating or skiing.
Where's that going?
YouTube.
Unless no.
Brian Sullivan asked me, where do you think the market's going? I don't really know. I said higher or lower, and there's a 50-50 chance of that. So it's a little dicey in here. So just stepping back, kind of looking at where we are, assessing what the longer term picture is. And that's the reason we're seeing some chop, guys. So we'll leave it there. A lot of earnings coming up. So let's get ready to trade it heavily into the end of the week. You're still here? I guess you liked the video. If you did, go ahead and click the thumbs up button or subscribe to this channel directly below, and you'll get the videos in real time. Or you're gonna have 7 years of bad luck trading and you have to babysit Jake and Brody.